Welcome everybody, Mike Smith from Hawkeye Options here. Very interesting markets as we saw the S&P drop 1.23% yesterday. And look, part of that was re-emergence of Fed interest rate hike fears, potentially for December, on the back of one of the committee's members speaking. We've got two more speaking tonight, which is interesting, as well as the FOMC minutes released. And of course, Alcoa reported earnings, and they came in really not too clever at all. And so whether that bodes worryingly for earnings season ahead is obviously in the lap of the gods, but we do have big banks reporting at the end of the week. So very, very upset market, doesn't really know what to do about the GOP and the internal debates, the Trump effect. So it's a very difficult call to make in a very difficult market in terms of a trade of the day. So we're going back to the S&P 500. Just let's look at what it's telling us. We have actually moved into downtrend on the two-day chart, but we'll see we're still in congestion, still within this range we've been in for the last month, between 2120 and 2180. And you can also see that a little more clearly on the two-day, but certainly on the weekly, we've got that broader range of 2200 down to 100. So we're still trading within this tight range, and a bit of a test of that potentially coming up in the next session. So how do we play this? Well, we've had a look across as many stocks as we had to invest the time in, and really haven't found a compelling argument to get into anything. So even though stocks that are range bound could be thrown around a little bit by bank earnings and the FOMC minutes. So it is an extraordinarily difficult time to call it. So if we were to place a trade today, and we are exercising extraordinary caution, it may be the S&P 500 that we look to place a trade on. So if we look at the SPY, which obviously reflects this. So here's the daily chart of the SPY. You can see it has actually gone into a downtrend if we look at the ETF. And same sort of deal, we're still in this trading range as you'd expect. But we could have a sort of look to trade this range. But what we could potentially do is trade this range with a butterfly type of trade, or we could trade it with a credit spread to the upside. So we have a credit spread here, which we could possibly place at 218, 220 with an expiry of less than 2 weeks. Or we could do a butterfly trade, probably choose a 212, 215, 218 as our three strikes, with obviously selling twice the number of contracts with the middle as the bought contracts on either side. That would let the SPY bounce around as much as it wanted. If we want to be a little more conservative than that, then we could even go a longer term 210, 215, 220, which would really hit record highs on the top. So those would be potentially ways to trade the market as a whole if you thought it was going to remain range bound over the next sort of month or so.